All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. And I am joined by the one and only Willy Woo, who doesn't really need an introduction, but we will be giving him one anyway. Willy, how are you, man?
Good, Tane. Good to be back. It's just like old times, right? It's been a while. Been
I
a little
know, I know.
busy.
You've been doing so many webcasts. You're on everybody's podcast, but hey, I'm glad you came back on mine before you take a little time off.
Yeah, I had to do it. Old times sake. Hey, it's been a crazy bull season this year so far. Yeah, cutting into the sleep really. This will be my last appearance for a while. I'm going to take a break. Um,
All
yeah.
right. Any thoughts on how long? Like 3 months or so? A little longer?
I don't know. At least a month. Well, at least 2 months. I'll see how we go. I'm not going to make any firm commitments just yet, but let's see.
All right.
Um,
Well, we're gonna take every minute we can with Willy and ask him as many questions as we can. So go ahead, Willy. It's been probably about a month and change since you've been on my channel. Let's do a quick intro because I have been picking up new subscribers. So I have your Twitter, I have your Substack, and I have your website here. So take 3 minutes and give your own introduction of who you are.
okay, I'm known as the on-chain guy. I look at the whole network, the ledger, everything that's happening on-chain to get a read of exactly what's happening with the market, where we sit in the market, in the sort of the macro cycle. Are we halfway in the bull season or not, and the individual movements. So usually you can predict the market relatively reliably for the next, 2 to 6 weeks ahead, um, if if we can get the call right. I think it's about 80% reliable. So I write a newsletter, goes out on Substack. It's linked to my profile page that Tone's got up right there. And really, it kind of breaks down what's happened in the market and where we could go next. So yeah, Tone's pulled that right up now. So yep. Over
Yeah,
to you, Tone.
you've been pretty accurate here with your newsletter. I mean, look, the consolidation caught all of us a little bit by surprise. You were also bullish, like myself, during this consolidation, and yeah, looks like you put out your last newsletter for a month or two. So we'll see how people survive because I know I try to read this thing within a few hours of you publishing it. That's for damn sure.
Yeah, I'm going to try and see if I can get another one in before I take the full break. This thing is like you'll find that it's been very bullish over this consolidation. A lot of people think it's going into a bear, but that's not the case. But actually, when the market's very speculatively bullish, the on-chain side of things gets less reliable because we're floating much above what the long-term spot demand is by investors who buy the underlying versus a lot of the market's driven by the futures market now. So you'll see there's been a few wrong calls. Like the last one was playing out until I say that someone tripped over the power cord and the mining hash rate fell off the network. And with that kind of we had some incredibly bullish degen longs in the system, and they got all flushed out with a scare like the mining going offline while everyone's highly leveraged long. So that kind of cascaded us into the last sort of price action we've got now with that waterfall, which we're recovering from right now.
All right, yeah, we're gonna talk about that. I'm gonna do my best to pay attention to the live chat and maybe get a few questions into Willy as well. All right, and finally, you have your website where you provide a lot of free content still because these charts are updating, and you can find that over at woobull.com or more specifically charts.woobull.com. And we're gonna pull up a few of these. Some of them have always been my favorites. All right. I'm just going to take a quick peek at the market of my own charts. And, you know, looking at this daily, I don't like this candle and I don't like how the day started. But I remember like late last night when the price was pumping to 57K and then immediately reversed. I'm curious what you think about that. And these moves have been happening quite often. So I'm really curious on that. For me, we are still consolidating. So I still think that we are more likely to go to the upside. I still think that on a daily scale, on a daily scale, we technically touched these moving averages, and now we are in a very, very tough spot where it's possible for us to go down. But I'm gonna go with Willy on this one as well. That the higher chances are that the low is in. But I'm really curious what you think about that. That's pretty much it for my charts, guys. I'm gonna stop my screen share, and I'm gonna be handing it off to Willy, and I'm gonna do my best not to interrupt him too much. But make sure you stop at the end of every chart for questions.
Yeah, feel free to interrupt. I like it. Let's share my screen. If I can find the doodacky, there we go. Yeah, it's actually, I'm not that far off where you're looking at it. It's kind of in a no man's land right now in the short time frame picture. Let's see if that's the one to share. Yep, here we go. Let's stretch that out a bit more. And I wanted to get the chat room up, but I don't have the screen space for it. Maybe that'll do. Is that good ratio for you? I think so. Okay.
Yep.
All right, let's jump to the Glassnode dashboard. And, you know, like I'll just cover a little bit of what happened here with the price coming back down. This is the number of futures contracts in the system, and we were a lot of speculation happening here. And when the mining power dropped off the network, this whole thing started to cave. Let's see if we can find that. Maybe it's not on this chart. There it is. That's a mining difficulty. Right when that difficulty just stepped up, we had the hash rate. So right there, right at the top of the market, which let's pull that to 3-month chart view. So it's all lined up. Right at that point, while the difficulty went up, this chart here shows the hash rate dropped, right? So they had a coal mine accident in China, in the particular province where a lot of the mining is drawing power from. About, what is it, 25 to 30%, something like that of the network hash rate is coming from that region. The hash rate just fell off. And you'll see there that like this is the mean time between blocks started to spike upwards right on that spike there. As the hash rate dropped down, I think people started to notice that the network was slowing down when that block interval time started to peak, and then you could see the sell-off dropping very quickly. And we liquidated $5 billion of Bitcoin positions, more or less. 1 million traders got liquidated, and that whipped us downwards. And then over here in this zone here, we had, just pull up another chart here, which is the flows coming from the exchanges. And I might just pull that into a shorter 12-hour chart. You'll see that as this thing started to come down, we had a lot of like coins moving over here into the exchanges for selling, and then that sort of tipped this sort of massive sell-off here. So this sell-off here was from liquidation further back. This sell-off from this point is from spot investors with the price action being completely wrecked, the market quite fearful, and that managed to push us right down to the bottom there. And so that kind of summarized where we were. We kind of got to the bottom of the what I would call the organic price. You can see this in the blue
Willy,
line.
I'm sorry. Go back to those charts. I do have a question on that incident, right? So when like 20% of hash power went offline, like you said, coal incident in China, shut off power, there was a sell-off. Now, the big question is, was this a sell-off by the miners themselves, or was this a sell-off because of people panicking, not knowing what's going on? Was it the sell-off by those from China associated with that event, like basically the miners themselves or people relying on those miners? Or was it, people in the US and Europe scared and panicking?
It was from derivative traders. Because, what is it? The majority of traders on Binance are on 20x leverage or upwards, something like 60% of them. So they're in DGN longs. Everyone's in DGN longs because we're up in this zone here, breaking all-time highs, and everyone's expecting this run up to, clear the 64, which is a fib level, and onto the 74, I think is the next level above. So technically, that's a good position to long from. Right, we're in this zone here where we've broken this kind of ceiling here, and you'd expect it to run up higher because you've broken that ceiling into an all-time high. Right, everyone was bullish. I was too. It was quite warm, I would say, but just from this consolidation of a month or so of resting, it wasn't like red hot. And it cooled down enough, and there was a lot of bullishness in the market. So in this zone here, you can see it on there, we're at a peak of open interest. The number of contracts in the system is at an all-time high, and let's match that with the 3-month here. You can see also in this zone here, the funding rates are really quite high. Interestingly, we started to reduce, this is so I was bullish because we went into this pointer just really sucks, but we were in this zone here. It was really, really overextended long DGN longs, but as we started to cool back down, I started to get bullish because it felt like in this zone of funding. So the higher this number for the guys that don't trade on derivatives, this is essentially the cost of funding a long position on perpetual swaps. And so it started to cool down. I thought that might be enough to launch us. But then you can see there's the hash rate fell off. Some of the smart traders started to unwind longs. I think that was the reason, because it coincided with the hash rate starting to drop. And then this real big drop here was when the mean block interval time started to moon, and you could feel the network slow down as you were sending transactions. So people were exiting their longs here. And you can see it there, right? See it there. They exited their longs. It looks like people were buying the dip still there, not knowing what was going on. See, it rose again. But then this whole thing came crashing. When that price point, which I'll get on a better chart, when that price point there broke, we broke this line. Right, so even if you were a technical trader, you broke that support line, you'd sell out. You set your liquidation, your stop losses in, and that just fired a cascade of stop losses and liquidations down to this point here. So that was a complete derivatives unwind. And the second wave was the sell-off from spot investors. And by the way, the sell-off from spot investors were very recent purchases of Bitcoin. There was very, very low age in those coins. They've been sitting in wallets for a very short amount of time. So that describes where we went to. And of course, everyone was screaming fear and bear market is in, was what I gathered. A lot of fear on Twitter, a lot of uncertainty. But what happened was we actually hit the organic valuation of what investors would support long term, which this blue line does an estimation of. I've got a better model which is in the letter, based on a different type of signal, really the capital coming into the network. This is based on investment velocity or volume, churn in the NVT. It's a different metric. They both kind of approximate, but the other one I have is much sharper, and it hit. The floor model hit, and the floor model hit at a time when we had a lot of resets going on. Like we had, like, let's see, we had, let's find the right chart. Okay, so this is SOPR. And so what SOPR does is it looks at all the coins that are transacting on the network per day, and we just count the profit makers from the loss makers, right? And if the sellers are carrying profit from the time they bought their coins to the time they sell, then it's a positive number, right? And then generally when it gets really, really high, it gets a bit overheated because not everyone can make crazy profits forever. So as you get this kind of ramp down on SOPR, it's essentially showing that the profit takers are selling and there's less and less profit in the coins that are transacting as they're selling to the new buyers. And we hit pretty much a full reset there. This is entity adjusted, so it's accounting for the coins that are moving between two distinct individuals. And like we can tell that by clustering everybody's addresses together. So it's not like movements within the same person's wallets. We had a full reset. So basically we got to a point where the coins that were moving were selling at no profit. And generally that spells a full reset. If you're in a bull market, very seldom you drop under because it means that the sellers are willing to sell at a loss, which tends to be a bear market behavior. You see that happening here in the 2018 bear, here in the 2017, it touches the zero line, it bounces up. Only in these devastating wicks down did we have a few people freak out and sell in the bull market. So we're bouncing off that. That was another sign that we were hitting the bottom. I mean, I think, you could probably pull up in the letter. I covered a bunch of them. So I kind of called bottom or very near the bottom, excepting for maybe a small wick down on the last newsletter. And actually, it kind of did play out. It wicked down. I was told there was a Chinese trading group trying to break the model, and they got everyone to sell, which I kind of think was a reverse pump and dump scheme, because if you look at, if we look at actually what happened.
I really like that last chart you showed, and that was in your newsletter as well. Definitely your last one. I'm not sure if it was in the one before that.
The SOPR, yeah. SOPR is really good when we're kind of starting to correct, because it gives you a sort of a countdown of how much before we get to a full reset, and that's where typically we see bottoms. And so here it is. Here you've got like, put up the letter about there and said, well, this is pretty much the bottom apart from a wick or two downwards. This should be the bottom because of the fundamental price that long-term investors are going to support. And obviously they are supporting it, because you can see inside this heat map how many bids are inside there. And it was the same for Coinbase as well. If we jump to
let me, before you get off that chart, let me ask you one more question. Now, I'm not a volume guy. Like those that watch my channel know that I very rarely focus on volume. But even I have to admit that this rally over the last 3 days, bouncing off of the crash to 47 has come on almost no volume whatsoever. What are your thoughts about that?
What volume are you reading? Are you reading like
exchange volume, like even like the volume bars that you see right there? Like
I know, but like what exchanges are you talking
it
about?
doesn't matter. Like the
it totally matters. It totally matters because we just purged all of the derivatives traders, right? So like look at that funding rate. It's just dead, right? No one wants, it's too chicken to take long positions. Look at this. This is the open interest. The contracts in the systems are zeroing out. No one's trading that. So when you pull all the derivatives volume off the system, right? All the degen ups and downs that we're betting on and the liquidations that really pop the price up and down, when that's out of the system, all the volume starts to drop because the volatility's dropped out of the system. So all we've got now is fundamental buyers. And when fundamental buyers are coming to buy the dip, right, it reduces volume even further because every down movement is being bought up. And so it's only till the price gets all exciting and it starts to get volatile again, does the volume come back in. Very, very strong correlation between volume and volatility. So we're just creeping up slowly. There's absolutely no FOMO in the system. But you look at the price chart and that's exactly what you'd expect. Yeah, like there's just look at the size of these wicks here. Bang, 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 bang. Apart from this squeeze where all the shorters got taken to the cleaners and we popped back out here and those guys got liquidated, then we're a very low volatility climb upwards, and that's the reason for no volume. And it's in this particular case of low volume, it's totally valid. And looking over to Coinbase, again, where we're stacked, this was the price that organic investors were willing to support, totally stacked. That Chinese group, if they were shorting into that, they were probably trying to get, the organizers of that group were probably trying to get their bags filled at low prices here, their longs filled. So anyway, I agree there's low volume, but it's solid reason for it because all the traders have just been wrecked. They've just had $5 billion taken off their hands. 1 million of them have been liquidated. Yeah, they're not going to come back till, they lick their wounds, I guess. Any questions? Chat room.
We got a question. If you can take a look at NUPL on Glassnode. Someone is asking.
Oh, yeah. Okay, I gotta.
If you're familiar with that,
I gotta kind of. Let's have a look. Let me get NUPL.
And Alan G sent a super chat. He's concerned that Willy, if you go away, the price is gonna tank, which is not generally true. No, but Willy has a legitimate reason to take a month or two off. I'm sure most people know, but just taking.
Yeah, I'm going to be a dad soon, guys. So I'm taking paternity.
Willy's got a baby on the way.
There's more important things in the market, right?
Yeah.
So we're warm, right? But take a look at 2017 over here. We for the entire of 2017, we were in the green band. Chop, 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 chop. We didn't hit euphoria up in this blue bit till right near the end. We're very cool right now. It's very cool right now. It's what we expect in the that 1 year crazy bull market if you compare to the previous times. So I mean, I'm looking at this chart and I see it is sort of trending downwards. I give it that. And every time we got close to the blue zone, we pulled back. But right now, we're out of the overheat zone, that's for sure. So I think it's quite a healthy zone right now. that kind of agrees also with like this blue line, right? This blue line, MBT price. Definitely agrees with the floor model. I mean, let's just do it. Let's pull it up. I think I put it in the, yeah, here we go. I mean, this is all played out. So anyway, there we go. There's the floor price. It just touched, right? And this floor price is backtraced without fail so far across 12 years. We hit the zero overheat, which is a perfect reset, and we're bouncing off it. So it's very, very undervalued right now. We're not overheated at all. I think we're up in this zone here. We touched this 0% overheat, essentially touching the floor 3 times in 2017. This is the first reset we've had in 2021. So it's an okay time to buy. I'd just be like, markets, you got to respect. Like if this starts breaking, that spells a bear season to me. I've never seen a bear season in the middle of that 4th year. So I'd be very, very surprised. But like, yeah, that's the kind of I would call that a very much a black swan if this breaks. But right now we're just kind of in that really boring zone where I think we just have to wait for the buyers to come in. And I'll show you some more metrics here. This is the pink. The pink is measuring the essentially the new users that first appeared on the blockchain. We can see that forensically that there's new wallets here, and we haven't seen them before, and they're not merging with other old wallets we've seen. So it's a new person, and then so we're counting that and subtracting the guys that are emptying their wallets and getting the hell out of Dodge kind of thing, and leaving Bitcoin. And so this is essentially the net growth of users on the Bitcoin network. And we've been climbing, and it was very, very bullish right on this breakout here. This is another fundamental reason why it should have gone up, but it was the DGN longs with the mining, power cut that broke the price pattern. So now price going down, we've seen this sort of really nice interest in buying Bitcoin reduce back to a normal baseline. So like it hasn't crashed, right? It hasn't crashed, which is a good thing. But it's we're regathering like that. We've got, only like on average, what is this? I think this is a 7-day moving average. This is. So we're only getting around 30,000 new people coming on chain onto the network per day. So
that's a pretty good number.
Yeah, you multiply by 3, so we're only getting 100,000. If you count Coinbase and Binance and the guys that are coming in new and not withdrawing to the blockchain, we're probably getting around 90, 100,000 people per day coming into the network. We've probably doubled that at peak, maybe even tripled it. But we're well into this bull market. I'll maybe pull this again. By the way, I use this data to estimate the total number of people that have bought into Bitcoin, which I think is interesting. I think most people are interested in ups and downs of price each day, but I find that kind of monotonous after a while. This is the interesting thing, right? A lot of this is from Glassnode data, and I pulled essentially that data and summed it all, and this is how many people on the blockchain, right? And that's the interesting bit for me. 2025, 1 billion people will have exposure to Bitcoin. That's the bullish sign there. But I digress. Let's get back to that nice pink chart we had. Got too many charts. I need Glassnode to label these better. Bitcoin, Bitcoin, Bitcoin.
Yeah.
You see, look, we're ramping up, right? We're going up and up and up. Let's maybe put a SMA on it. It'll look worse, I think. Yeah, see, we've gone up and up and up and up and up. If this starts to cave, that's sign for trouble, right? But we're not. We're in a nice.
That's a pretty big spike right there. It doesn't
That
seem
was a big FOMO spike, but also bear in mind this is over optimistic. There's they opened up this chart for me because I can treat it with care. This data is not for real yet because it takes time for those new people that appear to be new to be recognized as, oh, they just moved into an older wallet and then they cluster down and go, oh, you're not a new user, you're an old user. And so this will normalize downwards over the course of 1 to 2 weeks. So that's over optimistic. It's always over optimistic. It's probably going to come down to about this zone here. So yeah. Any questions? I'm told I should ask more questions or allow for more questions and get rid of that.
Well, a lot of people are asking, I mean, we will save it for later. A lot of people are asking about, the recent pump price of Ethereum and what's going on with looks like the altcoins are back. I don't know if you want to save that for later, keep talking about Bitcoin, or you want to address the
altcoins.
Price.
Massive. Look at this. This is dominance. Like I was expecting this where the red line was. I drew that, I don't know, months ago. And I was like, oh, it might play out. But then these are fib lines, these yellow bits here. And it totally went to the fib below. Well, maybe it bounces here. Not sure. Maybe it goes down to here because Bitcoin's trapped in a sideways band. Of course, I mean, anyone who's been in crypto long enough knows that if you're in a range like Bitcoin is, where we're ranging like this in a sideways band, the crypto capital from those guys that have been trading Bitcoin altcoins, it moves to altcoins because, if Bitcoin's going sideways, and if you're not sophisticated traders with options straddle positions to generate and make a bet on a sideways, you can't really make any gains. So traditionally what we do in crypto is we just move capital out of Bitcoin and into altcoins, and they're small market cap generally compared to Bitcoin assets, networks. So it doesn't take much capital to launch them upwards. And so we've been in an alt season through this whole sideways band, and I think this whole dip, thanks to this route we've had, is going to prolong this alt season we've got. It's just crypto guys getting bored with Bitcoin and moving into alts.
But how do you see from a fundamental perspective? Like, to me, people always think they understand the fundamentals behind a lot of these altcoins, and I keep trying to explain to them that they don't. Just yesterday on my comments of my video, someone was trying to get me to admit that Litecoin is a useful testnet for Bitcoin. And sure, Litecoin is a useful testnet for Bitcoin, but the Bitcoin testnet is more of a useful testnet for Bitcoin than Litecoin. So why are people pouring their money into Litecoin but not into Bitcoin testnet? And people realize, well, the Bitcoin testnet can be reset anytime the developers want. People understand that because it happens quite often, but people don't understand that Litecoin could also be reset because it's just not a secure blockchain. And I can use that argument on everything, including Ethereum, but obviously some are a little harder to reset than others. Ethereum Classic was easy to reset with a 51% attack. Verge was easy to reset with a 51% attack. And Ethereum is a little bit harder, but Vitalik is attacking it with a 1% attack because he's Vitalik, so he's removing the miners. So what people don't understand is these things kind of pump until it's not even a black swan. It's normal operations that will one day take it out. And what Ethereum has proven, just like the Litecoin testnet, that, yeah, some things are useful. And I guess Bitcoin should be used for payments. And once it's realized that Bitcoin is needed for payments, scaling functionality gets built out on Bitcoin, but obviously it's slow because there's $1 trillion on the line, possibly hundreds of trillions of dollars, possibly, getting money out of government is on the line. Same thing with Ethereum. Ethereum has kind of proven that these smart contracts are not going away. So the Bitcoin functionality to replace Ethereum has been being built out and is now functioning with the liquid sidechain. But there's no money in promoting the liquid sidechain, so it's very, very slow to get adopted. But adopted it will, because Ethereum literally can't scale. And there was another comment in our live chat today saying that smart people don't care about Ethereum. I see that to be true. Smart people don't care about Ethereum, but smart people that can profit from the Ethereum pump do care about Ethereum, but they don't care about the underlying Ethereum. They care more about the financial side of Ethereum. But is it a technology or is it a way to make money? Is it so that's the difference. But Willy, your general thoughts on this other technology, because my view has been, if it does prove to be kind of useful, it will eventually move to Bitcoin, but the eventually part is obviously very subjective and can take longer than people realize.
Oh, I have quite a different view. I have there's stuff that's useful, and yeah, there's stuff that's useful that I don't think we've built anything too mainstream useful yet. It's still kind of maybe dial-up days, moving to early broadband of the internet. So I don't think it's ready quite yet, but it's quite interesting, some of that stuff. But in terms of Litecoin, Ethereum, I think Ethereum, I'm not a believer in the technology. It's definitely fun to program with. It's very simple to program stuff. And because of that, I think it's also deadly because there's no, production rails that you see in normal development. So, if you want to deploy stuff and, test it rigorously and, make modifications and all that sort of stuff, it's very tricky. I'm not a developer. I'm just I've got some friends that are very deep into it. So they tell me this stuff is really, you got to really know what you're doing. It's almost impossible as the thing gets complex. So that's Ethereum is what I understand. Ethereum's value doesn't necessarily come from the fact that it's going to carry the world's, whatever. It is currently carrying some simple stuff like stable coins, and people are building some really interesting DEX projects and wonderful Ponzi's. I have nothing against these Ponzi's because they're quite nice experiments of they're just crazy fun experiments that whales are trying to take each other's to the cleaners with. But I think they're learning a lot in that regard. So a lot of lessons learned. But then there's a whole other monetary side to this whole thing, right? And you think about Bitcoin, what is it? Oh, well, it's listed on every crypto exchange, obviously. It's well-recognized branding. Lots of wallets support it. I can send fiat into an exchange and I can just park money in Bitcoin. It's very easy to do so. I can buy it and there's hundreds of billions of dollars of daily liquidity that I can buy into. If I'm Paul Tudor Jones and I've got billions to deploy, I can do that. And so all of these things are the network effects of money, of an asset, of any kind of store of value asset. And so Ethereum's actually number 2 You know, it's got a lot of liquidity. Every exchange that supports it. It's not like, you know, I've got shitcoin XYZ, and I go to Binance and say, hey, CZ, I'll give you $5 million that I just raised from this ICO, so you can list me so that my the people that bought my ICO can sell their coins onto the public. Ethereum doesn't do that, right? Because it's got that that network effect that any exchange that opens in, you know, a crypto exchange that opens, they're gonna list Ethereum. Because you want access to that liquidity. It's the point where the exchange needs that asset to, you know, derive profit from. So that's the goal of a lot of these assets. You know, Litecoin, it's got better of these network effects than like many of these new promising coins. Like say Solana is making a lot of news now because it's the next, you know, it's an Ethereum killer. It's fast. It's
Really, there's an Ethereum killer every 6 months, right? They're all.
That's right. That's right. This is the champion of the Ethereum killers right now, right? And so then Litecoin's got
I've never heard of it. I thought. Oh, you said which one? You said Cardano, right?
Solana.
So,
it's I think it's ex Googlers or some, you know, big brains trust. You know, what I make is they're not scammy. It's not like your typical Ponzi scheme sort of stuff. Real technology is being built. There's a ecosystem of developers on it. But Litecoin has better network effects. It's on every exchange, right? It's got huge volumes trading it. It's got derivative markets on it. You know, very well matured.
So does Doge now, right? I mean,
yeah, exactly. So you can kind of poo-poo all this other stuff and say Bitcoin's, you know, the one, but actually it's the major one. If I'm like you know, Tesla, I'm gonna buy Bitcoin, but all these other ones are proving miniature Bitcoin liquidity, monetary value, you know, and they're very volatile. And if you run the numbers, which I have, you know, they don't beat Bitcoin. They seem like they beat it because you see these little assets like Dogecoin go to the moon and then they come crashing down, and you calculate the risk to their returns, and actually you'll win long term being in Bitcoin. But that's not to say they're not great and fun assets to roll into, buy them, sell them, and trade them.
Yeah, but well, we're gonna end the shitcoin talk in like 3 minutes. But I've always played down the use case of a cryptocurrency for trading. I mean, it needs to have a use case other than trading. Like, I'm sorry, guys. Like, as much as we even have lots of degenerate traders watching my channel, including myself and Willy, as much as we, well, I used to trade a lot more than now. But trading is not a use case. Like, I've always made this argument that you need a use case other than trading. And in my view, when it came to crypto, Lightning is the killer of all of these. Were faster and cheaper than a Bitcoin payment. You know, the Litecoin and the Doge and all these other ones that claim to be faster and cheaper. Lightning is going to take you out. And Liquid is the Ethereum killer. Like, the real Ethereum killer is Liquid, not Cardano, not whatever Solana or whatever you mentioned, or Polkadot or EOS or Waves or BitShares or whatever came before that. Liquid is the ultimate one, and eventually things will migrate there because you know, that's where the underlying is the safest. But anyway, last thoughts on shitcoins, and then we're gonna get back to Bitcoin, or my own followers are going to get really mad.
Okay, all right. No, that's it really. I will say Bitcoin is, what is it? It's a store of value asset. What is trading? Well, what is investing? Investing is you're buying something and you want to hold your value. You want to sell it. You want to sell it at hopefully a higher value than you bought it at. You might do that over 4 years, 8 years. Trading is the same thing, except you do it over minutes to hours to weeks to months. So that's the full end use case for kind of Bitcoin. Kind of is. It's the main one that we use it for. We use it for store of value over minutes to years or decades, right? So once you've got that in the system, you can do interesting things. You know, you can use it as collateral. You can move it around the world and do remittance with it and all this sort of stuff. So I think that you know, if we have these alternative assets, I think it's not a bad thing. I mean, I'm not for scams. I dislike the scamminess of some of the stuff, especially in 2017. But I think this 2021 year is quite different. You know, I think it's easier to call scam because we've seen some horrendous scams in 2017. I think the market's mature. There's certainly scams in the system. I think the worst scamming is going on right now is on Twitter with fake followers.
I think Instagram is worse, man. It's really bad. See, I don't think you're on Instagram, and I am. I don't know.
Oh, I've got a fake Woonomic there, and
I do. Like
yeah.
people have been scammed. Someone got scammed for $50,000 by a fake tone vase. Another guy is messaging me now. He got scammed for $7,000 by a fake tone vase. And at least over a dozen people that have personally messaged me got scammed for $1,000 to $3,000 by fake me's on Instagram. Instagram's the worst because the moment someone follows me on Instagram, fake tone vases immediately start DMing them. Like people just watch my Instagram account, and the moment someone hits follow, the fake one follows them back and starts DMing them.
It's one, you know, it's one of the signs of a bull market when, you know, it just means we saw it earlier, this whole bunch of people coming in that are new, very first time, this pink line, right? It's like, look, these are the new number of new people coming in each day. Each one of them is a possible target for a fake tone vase. So yeah, once that starts to die down, it just means the bull run's over. I don't know if we can fix all that. It's just human nature, and it's like spam email, you know, it's like you can't stop it because it's so profitable. Yeah, until people get educated.
Hey, so we have someone that keeps repeating the same question, and it's a decent question that I've answered in the past. They're asking me, why is my TA only always based on the US dollar? And my answer is because that's the only currency that really matters right now in the world. It's still the US dollar, it's the world reserve currency. It's also the most stable. What's the point of me analyzing Bitcoin in the Turkish lira that's fluctuating? And if there's no or in, you know, any other currency that is not as stable as the dollar. So the same thing would apply to the Chinese currency or any other currency. I want to measure Bitcoin in the most stable currencies. The same reason why I only analyze gold in the dollar and oil in the dollar. One day we'll be measuring other crap versus Satoshis. But right now, I just don't see any need to waste time analyzing Bitcoin prices and other currencies. Maybe Willy Woo has a different take on this.
I mean, if you're using US dollars and maybe you care about US dollars, you probably want to trade on those charts. It might be more accurate because people are trading towards it. But actually, TA works on anything, you know. Look, I could draw trend lines on this chart. And this is SOPR. Like you see this converging triangle, and it sort of broke out sideways. It broke that support. You can do it on anything, really. If you're in Turkish lira, then maybe that's what's important to you. Like, I think a lot of people in the bull market, particularly new ones, they're trading against US dollars and they're freaking out when the price plummets, like we had just recently. And like, I don't really care about the price of Bitcoin in a bull market. I know it's going to go up. I'm more interested in, can I gather more Bitcoin during these ups and downs? You know, can I long out of these positions? And so I'm more interested in the Bitcoin side of it. And I need to pick a currency to long it against. I could, you know, like Ethereum's an interesting one, right? I could be trading Ethereum against US dollars or Ethereum against Bitcoin, and you could pick either, and you can just trade whatever you want to stack more of. You know, you can long-winded answer, but I don't think it really matters. You could do it on anything. Most people are going to do US dollars because it is the world reserve currency, so it makes sense, and it is the chart that you'll see on every exchange. So
Right.
it makes sense.
Boy, let's take a look at more charts, because I know eventually you're going to have to come off this stream. Let's go on some more charts, and then we're going to talk about where the price of Bitcoin is going into the future. The title of this video does say Bitcoin will reach 250,000. So Willie and I are going to brainstorm on when do we think that's going to be.
Okay, stay tuned. Right, yeah, this is like
mining, the mining difficulty ribbon, and like some of the other stuff that we usually look at on this show.
Okay, great. I'll just show some more interesting stuff right now. See this profile? This is like volume profile, but it's not. It's a profile of the entire supply of Bitcoin, and it's at the price that they last moved. It's ridiculous. Look at this big hunk of coins that moved above 45,000. This zone here is 53. This zone here is $1 trillion of market cap. A huge chunk of the supply moved last above $1 trillion. Actually, it's almost getting to the point where, like, if you zoom out a bit, this chunk here is
that's
huge.
price-based, not time-based, correct?
It's price-based, not what?
That's price-based, not time-based.
It's price-based, yeah. On the x-axis, we have the price, and the vertical axis is the number of coins that moved last at that price. So it's kind of like your volume profile. Let's see. Do you see the volume profile here? Yep. Right. It's similar to that, except this is based on volume being summed up. This is actually much more interesting, because this is actually all 18.7 million coins, and when they moved, at what price did they move, and like a big vast chunk of it is above. And let's go over to a little bit of art here. This is a contour map of the same thing over time, and like, is it actually doing anything?
But wait a minute, but we know that there is like 3 million coins plus that have never moved.
Correct, that's right. So like 3 million of the coins down in this zone here, they're probably going to be stuck there forever, while all of this stuff up in the 10,000 band is going to start moving upwards. And actually, you can see this in these contours of those coins moving from here all the way up and climbing. And I'll zoom into there and look at the contours there. 53. That's 14% of the total supply is moved above $1 trillion already. Yeah, this is by supply profile. Like, people are saying, are you going to do an NFT? And I might even do so. Oh, this is actually, yeah. All right. So anyway, going back, more charts. Let's drown you in charts. This is the Rick Astley chart. This is like the number of coins moving each day to participants on the network that tend to accumulate and not sell much. So coins have been constantly moving to these strong holders, strong hands. And look,
any chance we can zoom that out a little bit? I'm curious what it looked like in the last bull market.
Yeah, let's zoom it out.
Like make it like 3 years or something.
Okay, all right. So we can thank Glassnode for this. They let me show this all the stuff through.
Yeah, it's what I actually suspected. This is the longest stretch that we've ever had.
Let me finish plugging Glassnode first. Yeah. This is actually a very, very expensive product. I forget how much it costs, but it's very, very expensive. And they were okay with me sharing this stuff on Twitter and whatnot. And everyone else sharing this stuff is breaking their terms. But anyway, yeah, it's just like, this is it's nuts. This is, of course, our institutional buyers. This is essentially, I think is I think this is like, I think this is really a lot of the high net worth around the Michael Saylor corporate circles stacking. This is the corporate companies stacking. This is the high net worth individuals following the lead of the corporates stacking. And this is now, I think, just everybody, corporates, hedge funds, pension funds, and so forth.
But
Stacking.
again, this is the longest stretch by time we've ever had on this chart. And it's literally separated from the prior longest stretch by a tiny little speck of green or green blue, whatever that color is. And
Yeah,
man,
exactly.
this is getting rid. I mean, this is why you're so optimistic and bullish. I'm sure it's one of your biggest metrics as to why you think Bitcoin has a shot at 250,000 even by end of this year. Basically, based on that alone, he can do it because that's a monster consolidation.
Yeah, let's just give you another view of this. Exchange inventory is what I'm looking. Exchange balance stat, right? So what we're looking at here, wait for it. Okay, so this is the inventory on exchanges going down and down and down and down and down and down. Following this chart, come on Firefox, where all these coins are being scooped up out of the liquid supply, where they're held by wallets that are buying and selling and just locked up in wallets that aren't selling, which is the same thing as what we're seeing here, is inventory on exchanges depleting and going into cold storage and being locked away, particularly Coinbase, which is this blue one where I'm pointing to here. This blue zone, massive depletion. Institutions like to buy from Coinbase because it's regulated. So it's the same picture. This is what we're seeing here. This is actually like liquid supply. Okay, so essentially the delta, the change in this chart here, and I'll just turn off illiquid. That's total supply. This is the liquid and highly liquid, like the coins that are able to be bought because they're held by people that are weak hands. They're traders, they're speculators, and they're going down, down, down. It's just following the same supply depletion, which we've never seen before, right? We saw this piddly, pissant 5-month depletion, and then we had the 2017 bull market. Look at this thing. It's been going on for a year. And it's ridiculously deep. And this Rick Astley chart is essentially tracking the depletion out of liquid holders, guys that sell to strong hands that aren't selling. And what I wanted to show, because I wanted to move into where the price is looking like where we might be going, is we're seeing this. By the way, this is a 30-day moving average. So that when it dips, it is like some of the strong hands are now liquidating and becoming weak hands. But you'll see that this chart, whenever it's gaining, it's a very bullish influence. And then see where we're getting the dips, or they're selling a bit. Now at the bottom of the dips, we sort of get the local minima there. And you'll see it there in this dip, and you'll see it in this dip here. And so it looks like we're carving our way out of this. This is kind of a nice picture of give it 2 to 6 weeks, not like tomorrow or the next day, but like we're in a nice consolidation band. These decent long-term buying support. We've reinitiated Rick Astley's buying here. And so there's that. And what else should we have a look at? You want to do hash ribbons and difficulty ribbons. Before I jump to that, I wanted to show the entities, which is Let's just jump to this chart there. Yeah, so
Willy, we got 2,000 live viewers, man. Good job, guys. Thank you for watching. Thank you for the support.
Cool. Now it's a fun channel to be on, this one. I really like it. Just kind of unwind and play with charts. So this is the balance held by whales. Flat, they're not selling. We had quarterly rebalancing coming down. Whales were selling out before the end of quarter, March 31st, which we just found out that was Tesla actually selling 10%. They were part of that cohort selling down some of their supply. We've got dolphins and sharks, 100 Bitcoins to 1,000. They're flat. They've been accumulating. They're flat. And these guys, you know, the 10 to 100, they're trending slightly downwards, but mainly kind of flattish downwards. But everyone else is trending up. So like everyone's accumulating, and the only, you know, so who's selling? It's the ones that are 10,000 and upwards. And above 10,000 and upwards are either OGs or exchange inventory. And OGs sell into every bull market rally, because why wouldn't you when you're worth billions and you want to buy small islands and super yachts and stuff like that. This chart here, I'm throwing masses of charts for you. This is dormancy. That's kind of a measure of, like, you look at the volume moving between investors, and then you take into account the destruction, meaning how old are these coins moving between investors, and take into account the volume that's moving. And so when it dips, they're very young coins being transacted. When it peaks, they're old coins. So when it peaks, it tends to be tops, because you could argue that these are old coins. The old coins have more smarts in them because they're held by OGs. The dips are young coins because they're noobs, and they're selling out at the bottoms because they're fearful and they should be greedy. And so we also got that bottom signal there, right? And we're climbing out of that. So all of these kind of metrics are telling us, you know, peak fear is over, smart money accumulated bottom, and we're climbing up out of it. Rick Astley tells us that, you know, a few others. I think I had another one ready to show you, but we just go on. There's just a lot of on-chain signaling here. Here's another one. See all these dips? This is the number of active addresses on the network. They dip, you know, when it dips, it's kind of bearish, and it dipped there and it goes up. It wasn't bearish yet, but it was the prelude to this huge run up that we're coming out of. Whenever it's coming out of dip and climbing, it's been bullish. That seems to be the pattern for 2020, 2021. So it's different if you zoom back outwards. It's less exaggerated. I think the market's reacting a lot harder right now. There's more volatility and movement. I think maybe that's because there's much more data available. People are acting on that data. The market's getting more efficient. But whenever you see a climb out of these dips of active addresses, it's a bullish thing. So that's you know, on chain. Don't hold me to the next few days, but for the next few weeks to months, it's fine. I'll take a break while it's you know, it's not, you know, the price ain't going to crash down anytime soon. I don't think, anyway. You know, anything can happen in markets, but I don't think.
Hey, Willy, pull up a chart where you compare price to hash power. I thought that was a very good chart. Looking back at it historically, if you have it handy.
Yeah, price to hash power. Let's grab a Wubu chart. One that is price, hash power, hash price. What's the price of weed? So what is that? Like hash price, hash rate drops. Hash price per hash is climbing with the bull market. What one did you want? Did you want the ribbons?
Well, I also want the ribbons. Once you talk about the ribbons, then I'm gonna pull up the. I'm just gonna go to your Twitter. I know you tweet a lot, but I'll find it.
Not lately, but
Even lately.
okay. Dun, dun, dun. Okay. So, ribbons, when they compress and expand, it's bullish. We had a compression here and it's expanding, it's bullish. The end. What else can we say? We had a little bit of compression here and it's expanding. I don't know what we want to say about that. Do you guys want to know why it works, or? But yeah, it's a bullish setup. So difficulty or hash, mining hash rate. When it starts to dip, it means that miners are turning off their machines. And so generally, particularly in bear seasons, they turn off their machines because they're getting bankrupted, right? The price is going lower and lower and lower, and there's a liquidation point where the miner gets liquidated, it gets bankrupted. And then what they do is they shut down their hash rate, and then they, have to sell their coins that they've stacked to pay for all the debt they've incurred. And so you get this not trader capitulation, but miner capitulation. So this thing just goes bang, 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 bang. They take out all the weak miners. It's a culling of miners. And then the last men standing, the last strongest, meanest, baddest, most efficient miners, they ain't going to sell because they've seen all their competitors disappear. And then you'll find the hash rate starts to climb because those efficient guys are now expanding to take over. And so you get this compression and expansion. And that's my original explanation, and it seems to work. I don't know if miners are capitulating in this zone. Maybe a miner could be on the channel explain why the heck that works like this. But I do notice that this signal, which is so smooth and organic, when I release this indicator about here, it just suddenly it started to make these kind of shapes. So I kind of wonder if the miners themselves are trading on this, or maybe traders are using it, but it's definitely changed the shape.
Do you think it's a good thing, right? Because Bitcoin is always demonized for being centralized due to mining. And here you have an example where, it is like the strong miners understand that, if they take out some of their competition, obviously they make more money, but at the same time, they also understand that if Bitcoin is dominated by a single miner, it can spoof the network and people will panic and sell the Bitcoin and drop the price of Bitcoin, and they will ultimately make less money. This is literally the definition of, this is literally game theory, right? Like economic game theory, and like a prisoner's dilemma kind of thing going on, where you're trying to do what's best for yourself and what's best for the network.
Yeah, exactly. Exactly. You don't want to be the too big. You don't want to be over 50%, because then the trust in the network starts dropping. I think historically people kept each other in check, unless you're, I haven't worked out the economic game theory of what it means to attack the network by being 51% of miners, because that might not hold true in an age of derivative markets.
I think it does, because, and I've covered this as well, but now that we have 2,000 people on, and I wrote that article, Bitcoin Decentralization, and I briefly covered it there. The difference between Bitcoin and all other crypto is that it is financially advantageous to 51% attack any other crypto, because you can double spend that crypto on the exchanges and pull the Bitcoin out. So it is to your financial advantage to like literally destroy an altcoin, because you can profit by pulling the Bitcoin out. That financial advantage doesn't actually hold in Bitcoin itself, because if you try to do that to Bitcoin, I can't think of a single way you can actually really profit, because you don't have an exit strategy. If you destroy Bitcoin, your profit would be in Bitcoin that you have just destroyed. So hence you have no profit.
The
Now,
key
no
thing
one
was
to exit with the money by 51% attacking Bitcoin. And that is why Bitcoin is significantly more immune to a 51% attack than any other crypto.
yeah, I don't know. Like this is the key thing is derivative markets, right? So we had $5 billion liquidation. The question is, how big is your mining operation? How big is? Does someone know how big? How many billions of dollars of mining equipment do you need to set up, like to get 51% of the network? Is it like, if we know that, because like we just saw $5 billion of liquidations, and if I'm the miner that just 51% attacks Bitcoin, and I have sufficient short positions, and say I wreck Bitcoin, not like with this little dip, but I totally wrecked it in a short position, I could be making $100 billion in my shorts with the size of these derivative markets.
Right,
And
but you're making that money in Bitcoin, and this is the challenge.
No, I'm making in US dollars, man. I'm making in US dollars. You pick the right exchange. I get all my profit in US dollars on FTX. Different exchanges use different ways. Like BitMEX, you make your money in Bitcoin, but in some of these, like CME, that's US dollars collateralized and profit. So someone should do that. Someone should figure out how to rig this, figure out how to calculate that attack vector. I think it's potentially, you don't even need 51%. Like I could have enough hash power to, no, I could actually just, I could just flood the network of fees. I could just outbid everybody until the whole network slows down while shorting the price of Bitcoin as everyone freaks out over blocks not being processed, or their transactions.
See, that's a tough one, man, because I think one of the reasons why Ethereum is pumping to new all-time highs is because the fees are so high, and Ethereum users have been de facto turned into Ethereum hodlers because they're like almost stuck with their Ethereum because you don't want to move it and pay $100 transaction fees. So flooding the network by making it slower and more expensive could just, create more hodlers, hence making the price of Bitcoin go up, not down.
I won't comment. I won't comment. But certainly, people when the fees are high, it's very difficult to move and sell. But it's also it's a consequence of people being very bullish, and when Bitcoin's fees go up, it's a bull market because there's demand to buy that asset. And so buying the asset means that asset moves between one investor to the other, and you'll get a lot of volume, and then the network clogs up, which is great. That's a great sign of a bullish setup in any asset, actually, unless it's like attacked. That's different. If it's attacked, that's a bit different.
Well, we got some numbers. I mean, people are posting numbers. Apparently, someone said Andreas did this calculation, and that seems like, and his estimate was that it would cost 7 trillion. That seems unreasonably high. Someone else has an opposite answer. They're saying someone else did a calculation. It's 1.6 million to attack Bitcoin for an hour. I also think that's unreasonably low. I don't believe either of these numbers. But I will say that I've personally heard that like some of the mining equipment like builders, they're sold out for the next 2 years. So good luck getting that equipment.
Yeah, well, the fees attack, you don't need, all you need to do is flood the network with transactions.
Yeah, but I think the fee attack will just raise the price of Bitcoin. Like it's what's happening with Ethereum right now. That's my view on it.
No, you think so? I don't think so. I think the whole network clogs, and then I think that blew up DeFi season 1 when it cost like $250 to $300 to do a DeFi transaction, and I think we got a decent pullback on Ethereum because the whole thing clogged up. And it wasn't in demand to buy Ethereum. It was the whole network wasn't working. And, you know, and so, yeah, I worked out like back in 2016, I think it would probably cost $100 million to flood the network and sustain it. Sustain, I think it's 2016, 17, when, you know, it was really when the whole block size debate was going on and everything was congesting. $100 million. And that would probably be enough to freeze a network for 24 to 48 hours. And that was quite, yeah, you could short the market. Like we didn't have very developed derivative markets then, but I have a feeling it's even more vulnerable today to that type of effect. I asked Adam Back about this a few months back, and he said, well, this is a great thing about Bitcoin is that a whole lot of what works on Bitcoin is on layer 2, exchanges being the biggest layer 2. We move between exchanges. We've got Lightning, Liquid, but actually exchanges are the biggest. Like majority of transactions go to and from the exchanges.
I don't like to think of exchanges as layer 2. I like to think of Lightning as layer 2 because at least Lightning still makes, you can still be a custodian of your own Bitcoin, and it's still somewhat decentralized. Exchanges do none of that.
Yeah, it's interesting. I was quite surprised. Dr. Beck would say exchanges layer 2 in amongst it all, but I think he's very practical, and it is actually the reality. I can show you on Glassnode charts that, you know, it's essentially Bitcoin's going from our sovereign wallets into exchanges out to sovereign wallets. They are the focal point currently, at least until we have well-developed DEXs, which are coming. You know, they're coming, and you know, and they're also being developed on the other networks. So. Yeah, I'm not a maximalist, so like I think a lot of the stuff that's being developed is.
Okay, let's talk about the price a little bit. I want to do a shout out to We Smoke Bitcoins for sending us a nice super chat. All right, the price is breaking down a little bit right now, and I'm on.
Oh yeah. So I failed to mention that we just had an impulse. You guys should have seen that when I was rolling the charts. Like
we just fell below 54,000, which is a line I had drawn, and it's a little bit concerning, but I'm still, you know, optimistic and bullish here. But that daily chart's starting to get a little concerning.
Yeah, no, it's we're long term. I think structurally we're fine. I went through that earlier. I'm just pulling up the exchange chart right now. I do wish that this internet, I don't think it's the internet, I think it's actually Glassnode charts that are a bit slow. Okay, there you go. We just had an impulse of coins come into exchanges, guys. You should, like, so that's going to provide some sell pressure.
That's a 1 minute time frame.
No, this is obviously this is on-chain stuff, so it takes 10 minutes to process per block. That's 1 month. So we're talking very long time frames. I'll pull up. This is a 12-hour moving average, and so actually maybe I've got the bigger. What is this? This is the 4-hour moving average, and we had the impulse of coins coming in here, so that's going to help push it down a little. Yeah, like. Yeah, I would not be trading Bitcoin without these kinds of charts, because you're essentially front running the market here. Oh, someone's sending in coins to sell. Okay, let me just sell my positions before they sell. So yeah, like that's the pulse that pushed us down. By the way, this was the two pulses.
But it can also be a little bit tricky, right? Like if you look at the pulse down on April 25th, it was not pre-accompanied. It was, I mean, the amount of coins going into the exchange was rising, but not to the point where it was, you know, a day or two earlier. Yeah.
This bit, yeah, that's not. Look, we're already at this zone here, And you know what this chart's showing is coins going into sell. What it doesn't show is all of the eager buyers that have really got their money on the exchanges ready to eat all of those coins being dumped out of fear. So obviously you don't want to just look at one metric. Like there was a whole bunch of long-term buyers coming in to scoop that. But right now, we'll look in this order book heat map. This is Coinbase. We'll have to look at a bunch, but the order books aren't so thick under here. This whole area around the 51,000 zone is very strongly defended. Or maybe I wouldn't say defended because that's more of a trader thing. I'd say this is very, very juicy for spot investors to buy that dip and take them off the exchange. I'll just change this a little. I think we're going to see a bit of support in this zone in the 53. But yeah, like there's a bit of downward pressure of coins coming in. That's probably going to be absorbed by these bids in here. Would have to. This is Coinbase. We'd have to look at Binance. Binance being over here, and just check that green line is where my model is showing the floor price that spot investors will support, and looks the same in Binance. Look, we're in the 52 zone before it gets very thick. So I could totally see this wandering down here, maybe not even touching the local prior top, bouncing and going back up. Let's see. This green line gives me more confidence because that's a pretty solid model.
All right. Hey, I have one more question before we talk about the price, and that's on the GBTC premium, which has always been positive, as high as 40%, normally circulating between 10 and 25%. But for the last 2 to 3 months, it's been below zero, going as low as 20%. And what is your view on this? And that thing started just as Bitcoin's top was ending. And I remember the last time we did this show, or around the last, or maybe the time before that, everyone was talking about how GBTC and Barry Silbert and Grayscale are buying up twice as many Bitcoin into their trust, twice as many as being mined. And the way it works is they buy it into the trust, and then whoever bought them has to wait about 6 months, and then they're able to convert them into GBTC shares, and they were selling them on the market in the traditional markets to guys like me who are holding GBTC in our retirement accounts. They were selling them to us, and so many people were taking advantage of that premium that they basically exhausted, and the amount of sellers of that GBTC became greater than the amount of buyers interested in GBTC, and the premium basically shit the bed. And I think this hurt a lot of companies that were taking advantage of this, and they were offering, nice returns to their investors. And I think one of the reasons why Bitcoin has basically been consolidating for the last month and a half is because no one is buying into that trust anymore, because what's the point if you're going to lose money on the Bitcoin premium when you sell those Bitcoin out of the trust as GBTC? So I'm pretty sure Grayscale is no longer buying all this Bitcoin from the miners, which has slowed down the big advance. And I also want to ask you about Tesla as well. They clearly didn't buy enough to keep the pump going. And what do you think about all of that? And I think because of this, there's not going to be that many new GBTC shares coming onto the market the rest of starting later this year. And the premium will go back to zero and above until there are actual ETFs out there that have the ability to keep the price premium at zero or just about. So general thoughts on GBTC premium, Willy, if you want to comment on it.
Yeah, I don't really have many intelligent, insightful, things to say about this premium. I don't really know what's going on there. I know how the structurally it's working as you've described. I don't know why it's so negative right now. Really don't. Unless like you're just saying that a lot of buyers took that arbitrage opportunity, so there's way too much supply inside that trust now. Correct. For the actual market demand. Oh, I see what you're saying.
Yeah.
Yeah.
Oh, yeah. That's
so
exactly
what like the question is why? Like why there's like I think like the question is why is there less people buying into this trust? Is it now we've got like the Canadian ETF that we can buy Bitcoin there. I don't know if their numbers are high enough. I don't know. Is CME taking some of that? I haven't looked into it.
Well, look, a lot of people were buying into that trust, not because they wanted Bitcoin, but because they wanted to sell GBTC at a premium when after the 6-month lockup.
Yeah, okay. So it is oversupplied, but the question is, like, look at it. It's a negative premium, right?
Right.
What that means is you can buy Bitcoin cheaper than buying on spot market. So why wouldn't you? Unless you don't trust Barry Silbert's
No, but right, exactly. But now you would go and buy GBTC and sell Bitcoin on the spot market, correct? To arbitrage.
Exactly. It should move up, but it's not. So the question is why? Why? I don't know why.
Well, sometimes it takes a while for these arbitrage opportunities to close.
Like you, like, okay, you don't, maybe you're not looking to arbitrage, right? Maybe you want to buy, like, let's say $10 million of Bitcoin. Am I going to buy it at, what is it, 10% discount? Or I'm going to buy it with 0% discount? You would think that would close. People would buy the Grayscale ETF.
I agree.
It's cheaper.
I agree.
But it's not closing. So what?
My friends texted me the morning you hit 19% negative premium, and he already had a bunch of Bitcoin, a bunch of GBTC, and he's like, "Hey, Tone, should I just pile into GBTC?" And I'm like, "Yeah, take the 20% that they're giving you, unless they've been hacked and nobody knows. That's the only concern, because if that Bitcoin was hacked, then you're screwed." But that's a concern for every exchange, including Coinbase. But
I'd love to hear someone's very clear, simple explanation of why this is the case. I think it's probably nuanced, more nuanced than we can, like, yeah, I don't know. I don't know. Someone might have the answer to this, but I certainly don't. It just looks like a discount. I don't think it's been hacked. If it's been hacked, we can say Coinbase custody has been hacked, right?
Right. It's the same thing. Yeah, it's the same concept, right? I mean, that's the only reason for a sustained premium. I mean, for God's sakes, we know that Tether is not 100% backed. It's only like 75 to 80% backed, and even that's trading at par, right? So clearly that doesn't matter.
Yeah, exactly. So I don't know. That's my answer. No clues.
Yeah, no, it's really, really strange, and that premium will eventually go to zero, especially if they turn it into an ETF, because they would. I mean, that's the whole point.
Unless there's some sort of second order effect that's causing this, because they're preparing to launch an ETF. Maybe that's the case, and that's the reason, you know. But you should get Barry Silbert on the show and let him explain.
No, that will never happen. Since his brother started that INX exchange with the token, that's a utility token and built on Ethereum, they're not very happy with me. Yeah, well, I have very few friends in this space, man.
Why? You're such a nice guy.
Yeah.
No, I mean it. Like, I'm not joking. You are a nice guy. It's you're fun to hang with. So, like, why wouldn't they come on? Oh, maybe yeah, okay. Maybe you're not so nice if you're a shitcoiner. All right. So what should we do? Should we close it up?
No, let's just talk about the price, man. I mean, you've been publicly saying that you're very, very bullish. And I know Plan B is still very, very bullish, and your guys' price forecasts are somewhat in line. But I gotta say, man, like you've been, I don't know how publicly you've stated that you do think that $250,000 Bitcoin is very possible by end of year. What are your thoughts on that? You want to elaborate a little bit more? I think that's, I mean, I would love to see that. I think it's a little bit more optimistic than mine. I was saying between 100 and 150 going into end of year, but I am expecting the bull market to continue into at least half of next year, where that price target becomes a lot more likely. So what are your general views on the market?
I would say, firstly, this stuff is very, very hard to pick. For example, let's look at 2017. This is the blue line, and this is essentially tracking. This is very much tracking the capital supported by investors, you know, like, and so we're around a $5,000 zone. And prices like, and then we're starting to pick up here, right? And the price is like maybe 6,000, and the price is now contesting 20,000, right? And this is November to December. In 4 weeks, we went from $7,000 to $20,000. So like the last phase of that bull market is very, very speculative, crazy FOMO. You know,
all right, well, this is what Tyler James referred to as the fourth phase of the hyperwave.
Yeah, it's the mania phase of every bull market, and you know, Bitcoin one is absolutely crazy, right? And so there's this kind of organic buying that happens, but then you look at here, we're just in this nice, very organic zone, right? And I can see us wandering up into here. Like if you look at this sort of movement, like up usually December in this zone here is where the cycles end. It seems like it's valid because you give a supply shock shove and it takes 1.5 years of bullish activity before it burns itself out. That seems about right, before tax season, end of the year and Christmas holidays. And so what, we're up at around the 100,000 range here. I could totally see this thing starting to rip upwards. And the green line is the top model, which is, you know, it's a moving average model for Bitcoin. It's hit every top. I think it would hit these as well. I have to go back and recalibrate the price of Bitcoin before we hit a price of Bitcoin, because, you know, we don't have that price there because there was no active market, but obviously the price of electricity meant it.
Right. You have that model taking the price of Bitcoin back to the Genesis block.
Yeah, well, I need to know the electricity price and the hash rates to know exactly what these things were priced at. And then I think these would have touched as well, because you'll see that getting closer and closer as there's more history in the moving averages. So I don't know why it works, but it seems to work. And like, let's just look at this trajectory.
Yeah, man. When the price of Bitcoin eventually hits that green line, your Twitter is going to completely blow up because everyone's going to be expecting you to call a bear market.
Oh, I didn't know. I think maybe this will break. I actually think this model will break because everyone will be front running it, just like the hash ribbon, the difficulty ribbons. As soon as they're released.
But break in which direction, right? Is it going to break above the green line, or it's going to turn before it hits it?
Yeah, I would think that it would turn because everyone's looking at it and everyone's over leveraged in this cycle. I mean, don't you have Bitcoins that you bought on a house mortgage? I think everyone has that, right? Chat room. Yeah, everyone's taken out mortgages and bought more Bitcoin, right? Everyone's 150% exposed to Bitcoin, just like MicroStrategy. So we're all maximalists here in this cycle, and we're highly leveraged, and it's still going up into this. You know, this is the 200 band, this is the 300, this is the 400, and looking at the last zone, we're curving upwards, right? And we've got this long consolidation, so it's not curving upwards as much, but even on a straight line going up to December, like
I'm really curious to see
that's 300
December.
Yeah, like maybe we suffer a catastrophe and it doesn't happen, but like we'd have to break down below these organic valuations here. So, I don't know. I think that 300 is pretty nice. Plan B, stock to flow model, cross model, 288,000 obviously overshoots every cycle, so it would be in line with that. Also, then you look at Bitcoin, it has $1 trillion market cap. It's a quarter of the way of flipping gold. Gold's only $4 trillion if you look at its financial cap. Outside of its industrial use, 40% is used in bars of gold backing financial markets. So, and what was the Michael Saylor versus Frank's debate? He mentioned his friend did some regression modeling and showed that 25% of the decline in gold price was due to Bitcoin. So if that's true, we got like this, a quarter of like the price action of gold being sucked away and into Bitcoin. I could see us sucking a lot more, with a quarter of the way there from this run up, and yeah, I could see it's not a stretch in terms of fundamentals of money coming in and really working. I could pull this chart up. Bitcoin. This is I really need to. This is measuring how much Bitcoin goes up per dollar invested. We're in the $2.88 to $3.50 zone. So let's call it $3. $3 to $3.50. So if we get like maybe $1 trillion coming in, $1 trillion, we should get $3 trillion of $3 trillion of market cap gain. That, I think, from the top of my head, that gets us around that zone, right? Anyone got a calculator? I think if we get like gold's like what, say $10 trillion, about $500,000 is the equivalent. $500,000 of Bitcoin is roughly gold cap, I think. And I could see us sort of, if $1 trillion goes into Bitcoin, that would probably be what we'd need to hit it organically. And of course, we won't need to hit it organically because I just showed you that. I lost my chart. I just showed you how FOMO everything gets, and it's just off rampant speculation over these.
So I still think this is a double top bull market, similar to the 2013 one, not a single top. So we'll see what happens. I'm still waiting for my first top. I'm still waiting for this big FOMO to happen in the next few months to take us to, 75, 80, or 90, then have a significant pullback down to the 40 range, like a 40 to 50% drop. I don't know what would cause it. I have no idea. Maybe something catastrophic, maybe some kind of regulation out of the US. I don't know. And then the real FOMO late in the year, which may or may not end the price of Bitcoin above 100,000 this year, but it will be the trajectory towards that green line of yours happening after a 40 to 50% correction, similar to what happened in 2013. It's also possible we're going to be slow and steady for the next 12 months or so. What are your thoughts on the structure of this bull market? I know it's hard for you to envision a 40 to 50% correction, considering we just hit your floor and bounced off of it. So if we do go into the 70s and 80s range, your floor is now going to be somewhere like 60,000.
Yeah, exactly. It would break all these models, and it would therefore mean we're actually going into a bear cycle. I don't think we're going to get more than 32% pullback, and with the volatility of this cycle. A lot of organic buying going on, but I pull us up into this chart here. It's maybe a month old now, and so pink line is miners revenue, and this seems to be a pattern. I don't know why it works, but it just works. It's like I said earlier, you can do technical analysis, support resistance lines on any chart, and they seem to work. And whenever we slice the all-time high in miners revenue, Bitcoin goes through a consolidation phase. Same thing here, bang, we had a consolidation. Same thing here. Now we've been in it for like months now, and we're still in it. And like whether people see this as like a double pump, right? I'm starting to look at this as like, okay, that's our first consolidation band in the Wild West days when we had massive volatility. And this is the consolidation band of 2017. It was kind of a double consolidation there. But particularly in that zone, and we're going through it now, and it's a very gentle one. You can see how gentle that is just on the price
Right, but that chart is a month old, and in the last month we did pull into 47K. So you really want to update this one. I think it'll look a lot.
No. It didn't go to 47 because these are daily closes. Those wicks don't count. So like if we go through to there and we zoom out a bit, like if we pull this, actually,
We had a 49K close.
Let's see there. It's still a little wiggle, right? Let's pull that up. It's still a little wiggle inside there. That's much smaller than what we had in 2017.
Yeah, and that's the thing.
But
it is smaller, and while we haven't had any crazy corrections, right? So we had the correction from the $42,000 range that was 30.
This was pretty crazy time. That was a crazy correction.
And the one we just had was actually smaller than the one we had at 42. This one was only 25%. So we had a 30% correction in January, and this was our second biggest correction at 25% here in April. There was one more at 20%. Actually, no, there was one more 25% correction in February. So we've had a few. We've had this year alone, we've had a 30, a 25, and another 25. But we have not had, that 40% plus yet. And the question is it coming before the ultimate top or after? And that's a big question.
I'll tell you a reason why I don't think we're going to have the big one, and that's because, see, this is like, again, going back to the model I have for floor price and how high we float above that. And looks like in this zone, we float 32% above it, maybe 33, 32, 33, right? On daily closes. And we hit the 0%, which is the organic price, and we bounce off it. This only works in that 1 year during the bull run, the crazy main part of the bull run. But if I was to draw this chart out on the macro, I'll draw that, and this is a 33%. This entire zone here was I think it was a 44% from peak to trough, and it hit 3 times. And this one was something like a 66%. These are on daily closes, but whatever those numbers were, I think it's roughly that. You can draw a general trend line all the way through, and they all hit. And so I see no reason why the 32% pullback, and that's not actually measuring what we actually got because we had a 25, is measuring what the price has been doing next to the models that are framing it. And they are all in alignment. So I don't think, that's all to say. This kind of pullback is the max that I'm expecting in this cycle. That to there. Yeah, I mean, we're a big ship right now compared to 2017. I think like the old hand traders that have been in it, such as you for a long time, we're kind of used to this kind of crazy whipsaw, but this cycle seems to be a different animal. It's not behaving quite the same way as it used to. So
All right,
yeah.
Willie, I don't want to keep this under 2 hours. We've been on for 1 hour, 50 minutes. So let me get 5 minutes to look at my charts real quick for my audience, and then we're going to say goodbye.
For sure.
All right, so there you had it, guys. Willie is still pretty damn bullish, and just keep an eye on his Twitter for how much. But yeah, we both think that 250K is possible on this particular bull market cycle, which I think is going to last another 12 to 18 months. What about you based on time? What do you think on the time for this bull market cycle?
I think it's more likely to be fourth quarter of this year. And if it's not that, and then we could go on for, I don't know, maybe it's Dan Howard's super cycle.
So you think this bull market is going to be shorter?
Yeah, and it depends on, like I could, you know, I just have a whole lot of models that frame everything. I think that maybe we creep up at a less high trajectory, and then we finish off in fourth quarter. And then there's other trajectories, right? I think that if we start to get a dip, then we'll get a sell-off, and everyone will unwind from their leverage, and they'll, you know, like there's a lot of people that are taking leverage out to buy their Bitcoins, and that's going to scare a lot of people. But if we see in the fourth quarter of this year, some of the very large like institutions that have been preparing to buy, and they've had their, you know, research from the first quarter, it seems like the fourth quarter might be a time that they'd be ready. So maybe you need to talk to someone else that's more expert in the way institutions deploy their capital. But if that goes in, it's going to be completely enough price support to boost us past that sort of danger zone in the fourth quarter, which we've had the tops in every cycle. So, you know, who knows? Like, I'm not going to make any predictions on time this time around. I think it's very unpredictable, this market, and it's very different from anything we've seen in the past.
All right. Well, I stole screen share from Willie, but the one question I did not ask him is, what are your thoughts on the whole Tesla situation? Tesla bought 1.5 billion worth of Bitcoin. I'm not sure what average price was. My guess is around $40,000 is when they got it. During the earnings call, they announced that they sold 10% of that for whatever reasons. They said to check liquidity, which seems like a silly reason to sell 10%. More likely, they've made a bunch of money from it, and they might as well cash even just 10% of it out, knowing that it would lower the price overall and spook the market when people found out, and they will find out because it's a private company, public company. But the more important part is in Elon's tweet to David Portnoy, he literally said, "I did not sell any of my personal Bitcoin," which is Elon Musk admitting that he has Bitcoin that he holds personally, which he hasn't done prior to that tweet. What are your general thoughts on that as I glance at my own charts?
Yeah, for sure. Elon's had Bitcoin since year dot. I mean, anyone who doesn't know that just really, I mean, it's obvious because if you look at who his friends are, you know, who he used to play poker with every week with Chamath and Jason Calacanis and the Silicon Valley kind of OGs there, those guys held what, ridiculous amounts, maybe 10% of the supply in the early days. They knew all about Bitcoin, and so they had a lot of, of course he's a PayPal guy, right? So anyway, in terms of the Tesla side of things, I believe him. I would say, like, remember Ruffer? They bought at 10,000, and then they sold at, what was it? They sold half their position in the 24,000 zone, our first dip. And it was because they had so much pressure from their investors to say, look at this Bitcoin position, you really need to take profit. And so they sold half of it. That means that everything is house money, and they had no more sort of pressure. And so I could totally see there's pressure within Tesla and shareholders and their board of directors say, look, how do we know we can actually sell this position, and why not run a test? And you can't sell 1%. You've got to sell something decent to test the liquidity. So that's pretty valid. I think that's a very valid reason to, it's very much what you'd expect in a public company, so they sold some. Doesn't mean they're bearish. They held 90% and they're accepting Bitcoins to stack more, that's for their Teslas to stack more sats, really. So, they're mining Bitcoins with a car manufacturing plant.
Yep, that's true. All right, guys, real quick peek. I'm looking at the daily chart. I am this current daily candle is very concerning. Just gonna back up real quick. We had an MRI top back in January. This is literally like this year in Bitcoin. We was being supported by the 20 period moving average on the daily, and then we dropped down to the 50 period moving average, then make a new high. I have no metric to identify this top. So obviously I would have missed it, this as a top, but I had a nice metric to identify the next part as a top with the MRI. And we were supported by the 50 period moving average again. We had another MRI top, consolidated the market. Once again, just like Willy Woo said earlier, and myself, we were both bearish right at the top here. But then the break of the both moving averages on consecutive days and us holding below the 50-day moving average made me bearish. I became a bull off this almost triple support between the 128-day moving average, which I learned about from Willy, which is an excellent moving average, by the way, and the MRI support. And I've been looking for a 1 to 4 candle correction into the depth cross. And those that have taken my workshop know that whenever the price pulls into the depth cross, that is the perfect shorting opportunity for your asset. As much as I want to be optimistic here, this is concerning. We have now crossed the low of the doji of the prior candle. And right now, I am not very confident in the price of Bitcoin. The 1 to 4 candle correction off the MRI has played out. We got rejected by the moving average and by the depth cross. We have now crossed below the low of the prior candle's doji. And there is still a chance of a double bottom, but you guys know I don't like double bottoms. So I am not rushing in to buy any GBTC today. I am now concerned that these lows are actually going to get taken out. And I don't want to see us take out the 128-day moving average. So right now, as it stands, I am not interested in buying any Bitcoin or being bullish on Bitcoin until we get a daily close above both moving averages, which have now started to trend down. This is like I would not be in any leverage long positions right now. Of course, that could also mean that we're about to rip to the upside. But when that move last night did not hold, when this rally last night towards 57K did not hold, and we were not able to hold these daily moving averages, it pretty much changed everything for me. And now we're going below this support. So right now on a daily scale, I have no choice but to turn bearish on a daily scale today, even though we still have half a day to go. And I will probably be bearish going into the weekend until we recapture these moving averages. Those of you that used to watch Tyler's work on Consensio and moving averages, we now have 2 critical daily moving averages trending down with the 20 period going above the 50 period. We have not had anything close to this for almost a year. So the last time this situation happened was right here back in September of 2020, and the price did not pull into the depth cross, which is an actual shorting opportunity. We kind of consolidated and held the 128. So we have not crossed below the 128 since, wow, going all the way back to the crash of March 2020, over a year ago, was the last time we crossed below it. This is not a moving average you want to go below, but at this point, it's kind of scary because if we fall any further down below 51K, I'm going to be anticipating the break of the of this 128-day moving average, which would also mean that all of Willy's models will basically break. And I don't know what that means, but we'll definitely have him back on the show. So none of us want to see that.
Yeah, I don't want to see it. If 51,000 breaks, that's a bit of wiggle room, but that'll be very interesting to watch. If that breaks, it'd be pretty ugly. And I would never have seen that. We haven't seen that kind of thing ever happen before, like a break like that in the middle of a bull market. Not with the models I'm using anyway. So maybe they break. But overall, I think I don't see. I see a lot of stack of bids on the order books right now. So we'll see.
All right, guys, that was it. We're going to wrap up the show. Once again, this has been Willy Woo on the channel. You can follow him at Woonomic on, you're almost at 500,000 subscribers, 500,000 followers, man, on Twitter. Your Twitter is just blowing up. That's awesome.
Yeah, well, that's a sign to be bullish, right? Because essentially new people coming in. I'm not tweeting much, and you can see the same with Plan B. I think he's off on sailing trips.
Yeah,
and bulliships is just ramping up without much activity. That's a bullish sign that a lot of people coming in. So I don't know how low the price can actually go. I think we're overly bearish if you're a technical trader. If you're a fundamental trader like I am, it's I'm not saying the price is going to go up over the next day or two, but long term, we're set to go up. The fundamentals are supporting that.
Yeah, and a lot of people are asking how low would the price go, and I hate answering that question in a bull market. We can't analyze how low the price will go because we're still bullish and we're waiting for the high. It's impossible to estimate the upcoming low until you have declared that the high is in. So I try to avoid those questions because they're just not answerable.
I'll answer it. 51,000. Like that's the one that if we go below there on a daily close, the model breaks. I mean,
No. But they're talking about a pullback in a bull market. We're talking about if the bear market is already here and we just haven't identified it yet.
Oh, I see.
Right. So on a pullback, so for me, this rebound was absolutely perfect as well from the daily chart that I showed. And if we get anywhere near 51 again, I'm going to have to call this, the top. And now I'm going to be looking for sub $40,000 Bitcoin if we, go back into the 40s.
Right. Yeah.
Lots of things happen there.
This thing looks like a head and shoulder pattern, reverse head and shoulders about to form. If we bounce off the 51, 53 zone, it actually turns into a very bullish structure as a technical trader. But let's wind up the show.
All right. Hey, Willy Woo does have a newsletter. You're taking a break from the newsletter. You're going to try to get one out, hopefully one more before you take a little break. But Willy will be back. It's absolutely awesome. So please check that out at willywoo.substack.com. And of course, check out Willy's website, woobull.com, and the subsection of that for his charts, .woobull.com. All right, man. That would be it for us. Any closing thoughts?
No, I think we covered everything. It's great to be back. And see you guys next time, whenever that'll be.
All right, guys. Thank you all so much for watching. Hopefully we can get Willy out to the next financial summit, which we are currently planning. If not, he'll be at the one after that. I know he's going to be a busy dad in the very near future. Congrats again, Willy. And hopefully you'll start, continue with the newsletter, and we'll see you back on the show in a few months.
Okay.
Thanks, guys. Please like, please subscribe, please share, and see you all on the next